Hello, I'm Russ Mould, AJ Bell's Investment Director, and in this latest edition of our regular markets review, Breaking the Mould, I'm going to look at coffee, department stores and groceries, as they're all more than capable of causing a fuss in the week ahead. And this is because on Tuesday the 21st of June, we got a first quarter trading update from Whitbread. On Wednesday the 22nd, a third quarter statement from Debenhams, and on Thursday the 23rd, Tesco's will publish its first quarter trading update. So, let's get going with FTSE 100 firm Whitbread, best known for its Costa Coffee and Premier Inn cafe and hotel chains, as well as eating houses like Beefeater Grill and Brewers Fayre. The company has said almost as much as nothing since March's finals, barring the announcement of a small acquisition in the grab-and-go and online food area called Pure. Chief Executive Alison Brittain, she'll be hoping to build on the share price momentum that's developed since those better-than-expected numbers, especially as the share still trades somewhere below the all-time high that they reached early in 2015, as this chart shows. Now, key numbers to watch in the first quarter update on Tuesday the 21st are the like-for-like sales numbers. In 2015, these numbers were 2.9% at Costa, 2.1% at restaurants, and 4.2% at Premier Inn, all growth. And also at Premier Inn, you need to look at occupancy, which was 80.9% last year, and growth in RevPAR, or revenue per available room, and that was 2.6% higher in the UK and Ireland in 2015. Those are the benchmarks by which to judge the figures, especially as Costa and Premier Inn's growth rates slowed during the year. In Q1, for example, they were 5 and 6.3% respectively. So let's go shopping now with FTSE 250 firm Debenhams. Commentary on third quarter trading for the department store chain on Wednesday the 22nd will be particularly interesting for three reasons. First, there will be Chief Exec Michael Sharp's last set of numbers as he steps down after 5 years in the hot seat on 24 June, just 2 days after the numbers. I'm sure he'll be hoping to go out on a high, but the share price is languishing. As we can see here, it's barely changed on 5 years ago. Second, after the collapse into administration of both Austin Reed and BHS, we know trading's tough out there for retailers. Customers are price sensitive, internet savvy, and the living wage is creating cost pressure. So retailers need to be multi-channel and absolutely on their game. Sharp has tried to rejuvenate trading at Debenhams, but it's not been easy. This chart shows the firm's profit development over his tenure and analysts' forecasts for the next 2 years, and trend's just not that pretty. And third, the firm's just announced the appointment of Sergio Bucher as the new boss. He's ex-Nike and Inditex, and he's joining from Amazon's fashion arm, so I guess he's been brought in to ensure Debenhams' online offering in particular is up to scratch. When it comes to the third quarter numbers, our benchmark are April's interims, when like-for-like sales growth was 1.1% and 2.4% in constant currency terms. UK stores were up 0.1%, online 1.2%, and international by 1.1%, like-for-like constant currency. So let's see if there's been any positive momentum established in the third quarter, because those numbers weren't so great. Finally, Tesco. First quarter update, Thursday the 23rd. Boss Dave Lewis striving to turn the giant grocer around, with the sale of its Turkish business and Giraffe restaurant arm the latest moves. But a healthy rally in the shares, that's kind of fizzled out, and they've begun to retreat once more, as we can see here. This is partly due to fears of another price war, stoked by comments from Asda executives at a meeting held by their US parent Walmart that their strategy was to protect market share, not profits, which some interpreted to meant another price war was on the way. Any such move would certainly make it harder for Lewis to get Tesco back on track. Like-for-like sales in the UK rose 0.9% in the fourth quarter of last year, the first positive number in nearly 12 quarters, so this will be one key metric of progress. In addition, Lewis will be hoping to show gathering momentum in Europe and Asia, as both did show some signs of acceleration at the end of the company's last financial year. This final graphic shows like-for-like sales growth in the UK, Europe and Asia over the last 8 quarters, so let's see what comes out of Tesco on Thursday. Thank you for watching, and I look forward to seeing you next time.